Well, good evening, and let's get started so that we can stay on time. Just to want to make a couple reminders before I turn it over to Kathy Lowe. Please, when you're not speaking, keep your phone on mute. Of course, unmute when you want to ask a question. The guidelines, you must keep your video on at all times. If anything should happen and your call is dropped or anything, if you can send us a text or get some kind of communication to us so that we can help you, that would be greatly appreciated. Also, I think Nita had sent the link to the online folder where you can get samples of business plans, performance, all kinds of documents that can help you. So it is available for you there. And I just wanted to remind as well that some people asked before where they could find the video from last week. It's actually we have a Facebook page called Washington County Challenge, or it's on the incubators, the Virginia Highlands Small Business Incubators Facebook page, and I think maybe even the Chamber also has it on theirs. And then we also have a YouTube channel, Washington County Challenge, and it is there as well. So, Kathy, I see that Jonathan is running a little late, but he's wrapping up, but he will be here shortly. So that's all the things. Does anybody have any questions for me before we get started?
What puts it back on mute?
Online, your phone should have a mute button, I don't watch it. I don't use the phone option that often, and I don't know what the number is on Zoom. I'm sorry.
I got it.
Okay, good. And I wanted to see, did everybody get their pen and flash drive to use for your business plan? Okay, good. I was in a good mood that day, because I'm not always. So I will turn it over to Miss Kathy Lowe to introduce our panelists tonight, and I hope you came with tons and tons of questions.
So this is probably one of the biggest opportunities you have to seek help for the business challenge in writing your business plans and thinking about your pitches. We have experts tonight that have worked with the challenge for several years. I think Mike might have been in our first challenge. So we're always happy to have these folks, and I appreciate them more than I probably let them know. Mike Spiegler is on the Virginia Highlands Small Business Incubator Board of Directors, and he has been instrumental in helping us with new knowledge as well as the business plan challenge, and we're always happy to have him. John Martin is Virginia Highlands Small Business Incubator attorney, and he's probably in his 5th year of helping our contestants with their legal entity and legal questions and getting things started. And I'm forever grateful to have. It's hard to find attorneys that'll volunteer their time, so I really, really appreciate John doing that for us. My friend, Mr. Micky Tyler, I've known since I was in the 8th grade, and I'm not going to tell you how long that was because it'll make me and him both look old. But Micky is with the Insurance Center of Abingdon and has been in insurance for a good long while, I'll say. So I see that Jonathan Evenden is maybe not be on yet, but I think we talked about Jonathan last week. Jonathan is an IT guy. He has helped with new knowledge for, I don't know, at least 2 or 3 years, and has always given us some really good advice. And he's a new panelist this year. So
I'm here.
Oh, okay. There you go. So what I want to remind you of is that we need for you to be on camera and actively participating in the challenge. And, you'll get a lot out of this session. So I'm not, without further ado, I guess maybe I should give you some instructions. Mike Spiegler, I didn't say, is a CPA at Spiegler Blevins, and John Martin is an attorney at PennStuart. So the format in Zoom is a little bit more difficult. So if you'd like to raise your hand so that we can call on you for your questions, that might be easier if you all know that the raise your hand button is at the bottom of the toolbar. Does everybody see that? Okay. And if you don't see it there, you're on video, so you can just raise your hand on video.
And you can always put that in the Q&A or in the chat too. So there's 3 different ways that you can ask a question.
Okay. So without further ado, I'm going to let you all get started. And I think what I'll do is ask each panelist to just tell the contestants a little brief synopsis about themselves. And we'll start with Mike.
Mike Spiegler. Okay. I'm Mike Spiegler. I'm CPA. Been practicing for 35 years now, primarily in the area of small and medium-sized business, tax and accounting. Over that period of time, we've helped hundreds of companies start up, get organized, and hopefully get their feet off on the right start. Here to answer any questions I can. I've seen about every kind of business that there is and seen the ins and outs and angles on operations, and happy to help out.
And John?
John Martin, and haven't practiced quite as long as Mike, but my years are getting up there too. 27 years this year. I work with PennStuart, going on 20 years now with that firm. Do a lot of insurance defense work for the firm, for employers, both in workers' compensation and employment law areas, and try to do as much small business development as I can, time permitting. So always think it's great to see people in the community trying to start a business and improve and grow. And so that's what I'd love to help with.
And Mr. Tyler? He had muted himself, so he's probably trying to unmute. So Mickey, if you'll try to unmute, I'll call on Jonathan first. Jonathan?
Jonathan Evenden with Aegis IT. We provide quality IT consulting and business solutions found on personal character integrity. I'm sitting in my car because I got done at a client, and I'm sitting outside of a client to go in and do work after we finish this panel here. So we do IT consulting. I've been fixing computers since I was a kid. Absolutely love it. It is a passion and a hobby that has provided a full-time career, and I've got multiple employees, so we're supporting more than just my immediate family. We love all things computers. That includes security, that includes backups, emails, branched out into websites, programming, currently doing security cameras and security systems. It's just pretty much anything involving a computer or touching your network we can help you with. And we're very excited about small businesses and startups in particular.
Mickey, do we have you? Mickey.
Mickey, it shows you're unmuted.
Yeah. Okay. While Mickey works with his, I might need to call him and text with him and talk him through some of it. But let's just let the panelists get started with their questions. Anybody got a question?
We always need, Derek. Go ahead.
I had a question for Mike. On the quarterly taxes, how do I estimate what I need to how much of a check I need to send? I think you're muted, Mike. I can't hear you.
I'm sorry, Derek. There's a couple different ways that's determined. And, sometimes it depends on whether you're in a situation of your income and your resultant tax changing from one year to the next. So, the IRS has what they call safe harbors for the amount that you need to pay in throughout any given year. And that safe harbor basically just says that if you meet whatever the threshold is of that safe harbor, that you can owe $1 million with your tax return and not owe any interest or penalty. So generally the easiest safe harbor to meet is paying in 100% of your prior year tax via estimates in the current year, estimates and withholding. And, that applies if your income is going to stay the same or increase, because you never want to pay in more than you're going to owe. So, that's the easy safe harbor. But however, if your income's going down, you have an alternate safe harbor, which might just be 90% of what you currently think you're going to owe. So in that situation, you look at your income each quarter, you annualize it. In other words, first quarter, you divide it by 3, multiply that number by 12, figure your tax, divide it by 4, and that's what you pay in. Second quarter, you'd pay half of that number. Third quarter, 3/4, and then in the fourth quarter, you pay the remainder of it. And that, typically that's a moving target. But those are the two, what we call safe harbors for determining how much you have to pay in any given year and try to avoid owing any interest or penalty on any underpayments.
Okay. All right, thank you.
You're welcome. Looks like Katie has her hand up.
Yep. You can always count on me. Mike, I've got a question for you. So when we're preparing our financial statements and we're looking at projections for the years to come, what's a good way to sort of, ballpark those figures? When I've done it before, I've sort of looked at like an average of the years that I've been in business, and then also taken into consideration the most recent year, and then sort of tried to do like I don't even remember what kind of percentage I added on to that. But I tried to look at the trends of the months and sort of stay in line with that. But I didn't know if there was sort of like a good best practice sort of way to plan for those projections.
There's, in regards, on the expense side, it's pretty much a line item type of analysis. In your business, your rent's not going to vary a lot. Your utilities aren't going to vary a lot. Sometimes you just try to build a small percentage into, those things that are fairly stable. Right. You try to go through each line item and identify instances that may not be recurring. In other words, maybe this year you had a one-time expense that you're not going to have the next year. Or maybe next year you're anticipating some type of extraordinary item within that line item, or just an additional line item, and you take that into account. Up in your cost of goods sold section, you always want to be aware of what's going on in your industry as far as pricing, margins, and increasing costs, and nowadays supply chain issues. supply chain delays, price increases. History will generally tell you how much your average growth is. And I always try to build 3 different sets of projections: most likely, least likely, most probable, and just try to understand what my 3, where's my relief if I need it, what's my low side. So just really taking it one line item at a time, trying to understand what drives each particular line item.
What about as far as like to project sales that you might anticipate on that end of it rather than like the expenses? Like, is there sort of a set, formula for sales to come? Do you look at past sales, or how do you sort of extrapolate that?
I think you have to look at your past sales. I think you have to look at, inflation. A lot of times people just say, well, give me a 3%, 5% increase. You have to look at what your marketing efforts are. Are you increasing your marketing spend? Are you trying to drive sales? What's going on in your geographic area? Do you have a hot product? There's no one answer. It may be a combination of several different factors.
That helps a bunch. Thank you.
Well,
just for a second, Micky, are you?
Am I on? Am I
Yes,
on?
we can hear
I can hear you.
Yeah.
Okay.
Yes, we can hear you. You made it.
Okay.
And Micky, we've got a question while you're here. Don't move. Lori Briscoe wants to know, what's the best type of insurance coverage for different structures of business, like an LLC versus an S corp or sole proprietorship?
Well, the contracts themselves are not necessarily different. It's just the way you count the exposure for those different entities. Corporation is counted one way, a partnership another, LLC another, etc. The LLC is very popular, has been for a long time. Does that answer the question?
Did that answer your question?
Can you go into a little bit more detail about that? What does he mean by how it's counted?
Well, particularly in workers' compensation, each of those forms has different rules in the Commonwealth of Virginia for who is picked up as a payroll exposure. If you're an individual, sole proprietor or whatever, you don't have to cover yourself on workers' comp. You have to elect to be covered if you want to be covered. And whereas in a corporation, and if you're an officer, maybe even if you don't even work in the company, you have to reject coverage, or they're going to count some exposure for you and charge you premium for it. Let me just say this too about workers' comp and liability. One of the things I've seen over the years, and it's sort of like what Mr. Spiegler was talking about there with the estimated taxes. A lot of times you go through the year and you don't realize you're having a lot more payroll than you had, or a lot more sales than you had, and those policies, premiums, are sometimes based on sales or payroll. So you want to be sure that you understand that when you take out the insurance, and be aware that you don't want to get an audit bill, just like auditing taxes. You don't want to get an audit bill at the end of a policy year or end of the first year you started your business and owe a bunch of money that you weren't expecting to have to owe. So I'd be glad to try to explain that 101 too, if you want to call me later, whatever.
While you're on there, Micky, just to go on with that insurance question, Is that with any insurance or with corporations?
But it doesn't have anything to do with the insurance. It has to do with the form of business and the way Virginia counts it. Corporations are counted one way. Sole proprieties and partnerships are counted another, and LLCs, PLLCs are counted another way. So the insurance policy will be exactly the same. You just may have to end up paying more or less premium depending on, I mean, you wouldn't want to base your form of business on the cost of your insurance necessarily, but you want to be aware of that when you go in and talk to the insurance person at the onset of setting up your business policy.
Okay.
Yeah.
Okay, Janice? Oh, you're muted.
My question was also for Micky. Micky, when estimating coverage for a retail type of business, and you're looking at inventory and the build outs and all of that, how do you calculate that kind of coverage in the event that you have a major loss?
Well, you usually end up using the actual cost of your goods and of your build out, as you were saying. You can get some packages that offer replacement costs on the goods, replacement coverage. You know, you're buying them for wholesale, and you could get reimbursed retail when you have a loss, but you're going to pay more for that form. Usually it's best, particularly when you're starting out, it's best to just take the actual cost of what you're spending on your goods and what you're spending on your build out.
Okay. And one more part to that, is it wise to have loss of business added to that as well as payroll coverage?
Well, isn't that the same thing?
Well, yeah, I suppose they wrap over with each other. You may not have a payroll, however, you might have lost income.
Oh, yeah, that's right. Yeah.
For the owner,
yeah.
if there's.
Oh, yeah. It's good to have that. No, it's good to have that. It really is. And a lot of these fancy Dan packages come with all kinds of features, and that's one of the features. But now here's what you run into with folks who are just starting out in their business career. You know, it's kind of like a buddy of mine that went to a bank one time and wanted to borrow some money, and the banker said, well, what do you have that's worth that much money? And the guy said, well, if I had something worth that kind of money, I wouldn't be in here talking to you. And the insurance company doesn't like new businesses. And so you probably are going to end up starting out with a less than, lots of bells and whistles type policy in the beginning, unless you've been like doing the same kind of thing, but doing it for somebody else. I recently wrote a policy. In fact, it's somebody in the incubator, and I was able to get them a good deal because they had lots of experience working under other people. So just keep that in mind.
Thank you.
John, I think Janet Meadows has a question about, can you see the chat?
No, I don't see it, Kathy.
Okay. So Janet, would you like to just speak the question?
Sure, I can do that. I'm Mendota Expeditions, LLC, and I started a river tubing business this past summer. And of course, I have a liability waiver, and I just am worried about it. Nothing happened, but it's rather lengthy. And I went by the one that Adventure Mendota used before. And I'm just wondering, does it need to be like 2 pages? Nobody reads it, and they just simply sign it. That's all they do. And then I put it in the file and I keep it. And I'm wondering, well, how long do I keep those to be safe? And just, do you have any suggestions for doing a good liability waiver?
Yeah. So Virginia still allows liability waivers to be enforceable in most instances. The fact that it's 2 pages, you need to emphasize that needs to be read. You need to emphasize that your customers are signing away a certain legal opportunity. But once, as long as there's some opportunity to be a meaningful review, then it's probably going to be enforceable in Virginia. You run into situations with minors, you typically want the guardian or the adult to sign, for the minor. Typically what I think you need to consider is that Virginia allows a personal injury action to be brought against a person or a company or something like that within 2 years. If you don't do that within 2 years, then there's a potential statute of limitations that runs and prevents them from being able to pursue litigation. So as a rule of thumb, 2 years, maybe a little bit longer for confusion's sake, always a good thing. If you have the opportunity to scan them or have them signed electronically, then I would say keep them for a little bit longer, just because they're good things to have. It's always a situation whenever we're dealing with folks, you start asking about those types of documents, and they're hard to find typically. So if you've got a good system that allows you to store them electronically, that solves a little bit of your problem. Flash drive or external drive, something like that. But 2 years is typically the time frame. 2 years from the incident, there's some loose laws about knowing and when you should have known and that sort of thing, but you can generally say 2 years.
Thank you.
Does that help?
Yes.
Okay.
Clint, I see that you've got your hand up. You have a question?
I was trying to get it off of mute. So we're primarily a medical facility, but now this next expansion that we're looking into is just going to be like a fun phase. So indoor playgrounds, inflatable bounce houses, those type things. So when do you make the decision that it's best to create a new company? Because I know, like on our medical side, as far as for insurance, it's a much higher cost for the benefits. For whether it be work comp, based on, I know, like being in the nursing and the medical side of things. So is there a benefit to creating a new business as opposed to expanding the current business? And like I said, where do you make that decision?
I can just offer my 2 cents. From a legal perspective, I think when you're doing 2 different enterprises and they're strictly distinguishable, and you can make the decision that you can make a good showing that they're truly 2 different things, I would probably recommend you go ahead and have two separate entities. One is for the immediate protection, because your liability questions are probably going to be different. Based on just what you said, liability for medical related entity versus liability for an entertainment related venture. I would think that you could run into a little higher. Well, I don't know which area could be higher, but you wouldn't want a situation where your entertainment business maybe doesn't make as much money as the medical. If they're all one entity, then everything is subject to being brought into litigation. So, if you have one area that's making more money than the other, that's another reason to keep them separate. For going back to what Micky was saying about workers' compensation, in Virginia, your employees are classified. The Virginia Workers' Compensation Commission and their national clearinghouse have class codes for employees, And then you have what's called a modifier based on the risk level associated with the class code. So your medical entity may be a lower, maybe more. I don't know what it would be. I'd defer to Mickey on that. But you could be looking at two different types of insurance, whereas, probably if they're considered one employer, then everybody's going to be charged on the higher risk, I would think. But that's one. And then the other thing is planning down the line. You may want to sell off one entity versus the other. One entity may become burdensome or problematic, or it may become a cash cow that you can make a lot of money on. So being able to sell that and keep your other enterprise, that's another thought down the line. But I'm sure there are, definite accounting issues and certainly insurance issues too.
All right.
Yeah, I would definitely concur with everything that John just said. We talk about it in simplistic terms of protecting the assets of one business from the liabilities of the other. And, particularly if you have, two different business dynamics going on, at the end of the day, you're trying to be as profitable as you can, but you're also trying to limit your liability exposure and protect yourself and your assets. So, duplication of entities, comes with additional costs, but in the long run, it may save you somewhere else. So, especially as John, last point John made, as he alluded to, sale of an interest and sometimes, or sale of a business, sometimes it can be hard to sort of separate those entities and try to understand the true value of one business versus the other if the books are commingled.
All right. Sounds good. Thanks.
Hey, Jonathan. As for some of these that are starting new businesses, and as someone that's been working in IT technology for a number of years, I think COVID has taught us just how important having being online and using technology to help your business, whether you have to shut down, but you got to keep, working, doing the books and so forth. Can you share some tips for our contestants on what you would recommend just starting out, what they ought to look at?
That was partly why I posted in chat what the businesses were, because that will very much depend on what your businesses are and what resources you need. So, for example, if you have a retail facing store, you're going to need a solid point of sale. You'll probably need an e-commerce store if you're planning on selling things online. But if you're like me and your mostly focuses on services, then having brick and mortar is less important. And then you need, I have significantly different needs than somebody who has a retail store. So my marketing looks different. My Facebook page would look different. I don't have an e-commerce store on my page. So it heavily depends on what your business model is. Are you doing physical goods? Are you doing electronic goods? Are you doing services? And then we go from there. So most businesses will need an email. I cringe every time I see a business running off a Yahoo or a Gmail or, heaven forbid, an AOL. It still happens. I still run into it. So get yourself a branded email, register a domain, get a website, make sure everything matches. It just looks professional. We still run into businesses all the time where even something as simple as that just doesn't happen. And then get yourself a nice looking website. You don't have to spend a ton of money, especially starting out. There's plenty of templates out there. Certainly the types of websites that we're dealing with are not the cookie cutter, first website, but as you grow, that's certainly something to look into, and I highly recommend. And then from there, it's, do you need a server? Do you need QuickBooks? Do you need it hosted in your office? Do you want to do QuickBooks online? Do you want to look at one of the competitors to QuickBooks? Which version of QuickBooks do you need? If you've got inventory, you need a different version of QuickBooks than somebody who doesn't have inventory. And all that factors into what your IT infrastructure is going to look like from the business. Even something as simple as, do you buy a bunch of new computers? Do you buy a bunch of refurbished computers? Does everyone need a computer? Does every employee need a computer? Or do you have people that you can share computers with? Those are all very important questions, because that all affects your capital expenses starting out, as well as insurance. Do you need cyber liability? Are you going to do data breach insurance? Is that covered under your business general liability, or do you have a separate rider for it? Is it enough coverage? I don't know. That's a great question for the insurance person or whoever is handling your insurance policy. So there's significantly more involved in that, but that's the 1 minute hit and run. You're muted, Sandy.
Scott, you've got a question. I think you're muted.
Yeah, this is for Jonathan. I like your get a brand new email. That's good advice. So I've had a website for 6 years for Green Code Collective, and it's pretty robust. This year has been our best year so far as online sale. There, I don't do a lot of marketing, so I don't pay for ads or do anything like that. So everything's extremely granular. Like we're getting visits because people come into our store and then they go visit our website. Is there a rule of thumb as far as so I make this amount of money on my website, should I spend this amount of money on ads or marketing? Is there like a common denominator there that I should be thinking about as far as marketing goes? I know that's a broad question.
It depends on how much growth you want. And general rule of thumb is if you're being stingy, 5%. If you really want to grow, 20%.
Okay.
And if you're starting out, somewhere in between. Part of that will depend on, how fast you want to grow. Like I personally, because of the nature of my business and our focus on businesses, I did a lot of cold calling. I'm in a professional networking group, and that's basically how I grew my business, heavily through referrals. Most of our businesses have come through referrals or just connections I know. And only this year, after 10 years in business, have I actually started paying for online marketing.
Okay.
And partly because I'm at that point where I want to grow that faster than what the referral side has been. And there's specific products that I want to see grow faster than just what I've been getting through referrals. So now I'm spending money on marketing.
And how many years has that been?
I've been in business since 2012.
Okay.
With Aegis IT. But I've been in my industry. I've been fixing computers since middle school. Let's just put it that way.
Okay. That's good. All that's good. Thank you, Jonathan. Hey, and I have one more question for Mike or anybody else that might have expertise in this. So I know QuickBooks are kind of industry standard as far as keeping things organized financially. Do you guys are there other things that are popping up in the app world? Because obviously our technology world is growing. We're seeing AI happen. We're seeing all this crazy stuff in the media right now with artificial intelligence. Of course, there's going to be new things better than QuickBooks. Does anybody have experienced anything that's more robust and a little easier to use than the old QuickBook or the old Excel document?
Right. Yeah. I mean, nowadays there are a lot of different versions versions of QuickBooks out there. The most predominant anymore is QuickBooks Online. There is one, I think that's called QuickBooks Simple Start, primarily just really tracking transactions, but QuickBooks is the most predominant. They utilize AI. They sync to your bank and credit card transactions, bring that stuff into your account really as soon as it hits your checking or your credit card account. They have all kinds of front end apps, back end apps. There's other products. Xero is one of them. It's not as widespread, but it is popular. And I'm sure there's some others, but we utilize QuickBooks Online. Everything, we've gone away from desktop years ago, and it's simple. It's really, for most people, there's 4 or 5 transactions that you're carrying out, and it's not that hard to use.
Thank you, guys. I appreciate you. That helps a lot. Thanks.
So we went to QuickBooks Online, and the reason that it's good is because your CPA can log in and tell you when you're doing something wrong. QuickBooks Laptop is much easier. So it depends, like Mike said, it depends on, what your needs are. But if you have a bookkeeper or an accountant or a CPA that's helping you with your books, online is the deal.
Yeah. I mean, it's, the operations are very similar. I mean, most people are either writing a check, recording a deposit. From there, you go into sending an invoice or receiving a payment. it's really, it can look and feel more cumbersome than it is. But, I wish that QuickBooks would allow you to sort of dummy down some of the menus, and it would be a lot easier to use. But it's not bad at all. Most of our clients we train in 45 minutes, and we never see them again.
So I don't know who can answer this or who I asked this question of, but I have been getting referrals from the clerk's office of Washington County as well as the banks, because folks are looking for their LLC certificates. And apparently back in the day, they had to be filed with the clerk's office, and now they're not. Or can anybody give me some insight so that when people call me, I can help them? There's something about your LLC certificate that used to be filed with the clerk's office. John, do you know what I'm talking about?
Well, when you go online, Virginia State Corporation Commission is where you create your LLC. And through that process, they'll give you the formal documentation to confirm that you have it. From there, each year you get a licensing renewal documentation. So, the State Corporation Commission should be the keeper of any of those documents that the clerk's office may want. It's been a long time since I've known anybody filing their LLC certification with the clerk's office, but that would be the process that I would go to the State Corporation Commission, Virginia State Corporation Commission.
So when folks are forming an LLC and it's it's maybe them and I don't know, one other person, in order to get that LLC accepted, do they have to write a set of bylaws, or is it just articles of incorporation? Tell us the process of that, because I never know. I try to help them, but again, I'm not a lawyer or a CPA.
Sure. Well, I'll chime in and then let Mike do the heavy hitting. But to have legal status, you have to file articles of organization with the Virginia State Corporation Commission for an LLC, articles of incorporation for a corporation, and it's all web based. So you go in and you do that. You pay a filing fee. They have certain information they want. For corporation, you have to indicate that there is a person in Virginia who is registered. They have to stay registered with the Corporation Commission. And the reason that's significant is if that corporation becomes the target or the subject of legal activity, the registered agent in effect becomes the person who takes receipt of legal paperwork. So back when you had your hairstyling business, if I wanted to sue you and you were a corporation, I had to serve papers on your registered agent. Otherwise, I couldn't get the lawsuit off the ground. For an LLC, you have to indicate a person. It can be an attorney, but you have to indicate somebody who's going to be the registered agent. If that agent changes, passes away, leaves state, you have to notify the commission. You have to notify the State Corporation Commission. Otherwise, you're in violation of your legal existence. And the reason that's important, if your legal existence becomes, if it stops for any reason, then your corporate protection or your LLC protection falters and you become personally liable. So going back to the adventure, the rafting situation, your corporation is a shell that protects you from that liability. If you don't have your corporation in order with the State Corporation Commission, then you can be personally liable for those activities that your corporation undertook. So going back to what you're saying, though, for both a corporation and an LLC, the corporation has bylaws that you operate. The State Corporation Commission You can file those with the State Corporation Commission, but they don't require that. The bylaws, and then for an LLC, it's articles of organization. Those are sort of the contractual method by which you operate. You have to indicate that you're going to have bylaws with the State Corporation Commission, but both of those are documents that are more internal, but they become significant. So for instance, Kathy, if you and I formed an LLC together, you may be the one doing all of the work. I may have money invested in it. The articles of organization are going to tell us how we split our revenue, maybe 90-10 or maybe 50-50. It also has other more important things, and I'll stop and let Mike fill in the details about the significance of those financial bearings.
Yeah, I mean, as John alluded to, that agreement basically defines, how you're going to operate, who has what responsibilities, how you're going to divide profits, what happens when somebody dies, are you allowed to sell your interest in the business, what's your fiscal year end, what happens if there's more money that's needed to be infused into the business, is there a capital call, how, on wrapping up the business, how are whatever assets remain upon wrap up distributed. There's, it's all the rules of basically, how you operate the entity, how you get in, how you get out, and how you get along, really. So it's very important to understand, not just accept the boilerplate agreement, to really understand and question the provisions within those documents. I'll just keep it simple like that.
So when folks are setting this up and they're really confused about articles of incorporation or articles of organization, they can call a CPA or lawyer or both.
Most of the time, what I find out is that if people do it correctly, we end up working together, because the agreements have tax aspects that have to be looked at, and they have legal aspects, and sometimes you just can't flip things around without ignoring the other aspects, so to speak.
Yeah, and one of the whenever folks tell me they want to form a corporation or an LLC, the first thing that I instruct them to do is to speak to their accountant to see what their best tax strategy is going to be. And once they do that, then we can help them, or they can, you don't have to. The State Corporation Commission is now fairly friendly as far as filing the articles, but the articles are different from the bylaws and the operating agreement. So just remember that the articles are sort of like your birth certificate. And then the bylaws and the operating agreement are sort of kind of the contract on how you live your life, so to speak, or your business life. So, but I always start with tax consideration first, because that's what you're going to be living with the longest in that.
And so with that, Micky, does it matter when folks start their business? Is it helpful for them to have an LLC instead of a sole proprietorship?
It doesn't really make any difference as far as the insurance is concerned, or at least the cost of the insurance. That'd be something they would need to consult with their financial person about.
Okay.
Yeah,
well,
I don't believe the cost of workers' comp on a business owner is a driving decision point in the type of entity that you're going to choose to operate under.
Correct.
Is there a minimum number of employees you have to have, Mike, to be required, or Micky, to be required to have workers' comp?
Micky, is it still 2 or more, or 3 or more, whatever?
The state of Virginia says 3 regular employees.
Right. Yeah.
They can be part-time.
Yeah. And as Mickey mentioned earlier, the laws are a little squirrely sometimes. Virginia requires you to have 3 or more full-time, but they can be part-time, but they're regularly employed. That can count too. But if you're a sole proprietor, Virginia does not count the sole proprietor as one of the 3. If you're a corporation and you are the sole owner of the corporation and you're the president of the corporation and you operate it just like you do a sole proprietorship, you still automatically start out with 1 employee. So you have to be very careful, and you have to understand that, that the State Corporation Commission is going to look to require you to have workers' compensation insurance coverage. And, my recommendation to folks when I talk to businesses and they tell me, well, so-and-so told me not to have it. I think, for the cost of it, it's probably a good idea, a good idea to have it, even if you don't think you qualify or you're required, because something can happen later on that pushes you over that number and you didn't even really anticipate that. So, it's always a good idea to have workers' comp, because defending a workers' comp claim when you didn't have insurance and the state says you should have, it can be very, very expensive.
So let me just recap what you said. If you are the business owner and the only partner, if you're sole proprietorship, you're really not eligible to draw workman's comp. Is that what you're saying?
No. So the trigger that Virginia's going to look to see if you have 3 or more employees. And if you have 3 or more employees, then they're going to say you should have had workers' compensation insurance coverage. So going back to our discussion earlier, you have your styling salon and it's you and 2 people, 1 person assists and 1 person maybe just comes in a couple of hours a week and they empty the trash and clean up and do some things like that. If you're a sole proprietor, you only have 2 employees in that scenario. But if you get larger and you decide, or you start seeing a lot of income and you decide to incorporate and protect yourself, or use, avail yourself of a corporate protection. And so now it's Kathy Styling, Inc., and you are the only shareholder, but because the Virginia laws for a corporation require you to have at least 1 officer named, that officer, whether they receive money or not, is now an employee. So now Kathy, who was the sole proprietor, is now the president of the company. She now has 1 additional employee. Those 2 additional employees that you had working for you, nothing changed. You now have 3 employees. You now must have workers' comp coverage. So it changes, and it gets even more confusing with an LLC, depending upon how your operating agreement treats your income. There's some case law that says if it's more akin to a partnership or a sole proprietor, then that LLC doesn't have the owner of the company is not a counted number. But if you treat it more like managing, an operation that is managed by a member, then it can be more towards the 3 employee level. So you really just need to talk to somebody about that. It's very tricky for the way the Virginia Work Comp Commission defines it.
So that brings me back to one more question, and then I'll shut up. So, we send out 1099s for folks that are not our employees. The insurance company asked me the total dollar amount of those 1099s. So our rate was based on the 1099s that we sent out also.
I would defer to Mickey more on that, because I think that comes into more of your auditing. But one point I will interject. Virginia says that you have to be an employee to fall under the number to count for purposes of whether or not you have workers' comp insurance. A lot of people say, well, I just give a 1099, so I have an independent contractor. That is not the rule. And much like the federal government will look at your function of your employees to determine whether or not you should have held out taxes, Virginia will look at those things. There's a list of functions, but basically in the workers' compensation world, Virginia looks at whether or not you had control as an owner of that employee and their actions. So if I come in and I work for Jonathan and I'm just removing hard drives from systems because that's something he trusts me to do, but he tells me which systems to operate on, to take the hard drives out of, and he's paying me 1099. I'm technically an employee of his for purposes of the workers' compensation consideration. If he pays me to come in and to take out boxes from computers, to take them to a landfill or to take them to recycling, and that's what I do, and he doesn't care when I come in, he trusts me to come and go, I'm an independent contractor. He doesn't have to pay workers' compensation for me. So again, you can really get into some trouble by, if you think that a 1099 is the distinction, it's not. It's the function and operation. But I defer to Mickey on the audit portion.
As a conscientious business owner, I started carrying workman's comp even before I was legally obligated to pay for it. Partly because of liability to me, but also partly because of concern for my employee. So that's the state minimum, but I would strongly encourage it, even if it's not required.
Yeah,
because you could be taken to the cleaners if something happens and you don't have that insurance in place.
Yeah, it's very, very costly. When you think that the main driver in a workers' compensation, when I started 27 years ago, the main driver was wages. Now the main driver is medical. So workers' comp requires you to pay for lost income and for medical treatment. You can never miss a day of work, undergo 2 MRIs, and you're already $6,000-7,000 in the hole. So it's a very, very smart choice.
Okay, any other questions? This is a great opportunity, folks. Oh, okay. Derek?
Hey, I had a question for John. So, my business is Derek's Diesel and Small Engine Repair. On what risks should I be concerned about with the repair aspect of things?
Have you sort of defined the scope of work that you're willing to take on from customers?
So far, it's been a very wide range of work.
Okay.
Kind of wanted to just do diesel and small engine repair, but it's been, so far it's just been everything that you can think of.
Sure. And that's, as you can imagine, I think in one respect, because you're willing to do so much, because that's what we do when we're developing our business, your exposure is higher. So you're a service technician, and technically you're offering a service within a reasonable range of expertise. There's a community standard basically. So, if you repair something and it goes bad, then, if you're working on a 2018 Peterbilt and you cause a $60,000 engine to go down, then, your exposure is the cost of that engine. If it proves that your your activity is the thing that caused the actual catastrophic failure. One of the things that you need to consider is you're offering a contract of service. And so what you're saying to folks is, I'm going to take a look at your machine. If I can fix it, I'll do this, that, or the other. You need to be very explicit in what you're offering. You can get in there and say, well, we'll take a look at it. And that's fine, because that's a different aspect than being able to say, okay, now I've looked at it, I'm going to fix it. But the bottom line for you is you're verbally committing, you're verbally contracting to do work within, a reasonable standard. So the idea, is were you over your head? A good friend of mine is a mechanic downtown, and he buys all of the computer codes for all of the cars that he works on as soon as they're available from the employer. And he'll say, I can't work on that. I don't have the computer code. It's not released to the mechanics, so he'll cut you off right there. He'll say, I can't work on that car. I can't. That's where he cuts himself off. So it's those kinds of considerations, and you just really kind of need to be very clear. Invoices are a good thing to put down, because they're not invoice, but tickets, your sheet, your worksheet, your work ticket. Yeah. Because, somebody could say, well, Derek worked on my exhaust system, but my transmission failed. You want to be able to say, look, we agreed I was only going to work on your exhaust system. There's nothing wrong with that, or vice versa. So, part of what you're doing and part of what you need to do is, manage your client's expectations, because then they can't come back to you and say, well, they will, because, the public is like that. But, you just need to be able to have some control in what you're doing. So again, it's a community standard as far as, what you're expected to know. Are you supposed to go to diesel repair school and take refresher courses every 30 days? No. But what are all the other mechanics of your caliber and your class doing in your world? You need to be aware of that. Because if somebody brings in a 2018 Peterbilt, and you take a look at it and you miss it, or you misdiagnose the problem, then the question is that, can they come back and say, I took it to him, he should have seen it? That then becomes a question of
I've got my essay written. Okay.
But, does that help, Derek?
Lost.
Yeah.
I didn't hear the end of what you said there. The audio was cutting out.
Yeah, no, I was just saying, is that me? I'm gonna kill my camera sometimes.
No, John, I think it's Derek. He's the one that's we can't hear him.
Yeah.
So Derek, while he works on his audio, we got Katie Humphreys has a question, has her hand raised.
Okay, so right now I'm a sole proprietorship, and I have an employee that I pay with a 1099 at the end of the tax season, or I guess don't pay her with a 1099. I account for her with a 1099. But obviously for this challenge, it requires a full-time employee in a different type of form. Is there a way for me to still be able to qualify, I guess, as a sole proprietorship, or is there something different that I need to do as far as the forms that I fill out at the end of the tax year?
I'd say that's a Mike question.
Why would you want to stay a sole proprietorship though? That's massive liability, especially if you got an employee that you're giving directions to.
Mike, you're muted.
So.
Are you referring to the rules for the contest, or are you referring to taxation?
I mean, yes, the rules of the contest, but I mean, just as a general, like, would it be smart to switch type situation, I guess?
Yeah. Well, it's really not an optional test. It's not, you don't get to pick and choose whether or not somebody is your employee or whether they're truly a subcontractor. I mean, if you are exercising, behavioral control, financial control, control over the relationship, how they do their job, what kind of tools they have to show up with. If you have, agreements in a particular way, they have to carry out their job schedule. They're not doing what they do for you, for other people. They're probably your employee and they need to be paid on payroll as opposed to issued a 1099. 1099 is the easy way out, but it's not always the correct way. And, as you've heard in some of these discussions, it can probably open you up to some liability issues.
So I guess, how do I transition into do it? I mean,
so for last year, yeah, you're probably cooked at this point in time. For
right.
2022, you just put them on payroll and move forward.
Okay.
And somebody can't be both an employee and an independent contractor at the same time. So, if they're working in the store and you're paying them, hourly and putting it on a W-2, and they come in on the weekends and clean the store and you pay them, $100 as contract labor, that doesn't work either. It's one or the other.
Gotcha. Thank you.
Mm-hmm.
And Janet, you are next. You're muted.
Yeah, just reaching for my mouse.
There you go.
My question is actually for Jonathan. You talked about point of sale systems in retail, and a lot of businesses seem like they start off with Square. Are you seeing any point of sale systems that are better than Square? It seems awkward at times. The inventory doesn't seem to be as elegant as it could be. And kind of like Scott's question, with technology changing so much, isn't there a competitor out there now to Square that's really a lot more refined and maybe doesn't charge as much? Or if they do, you get more services for what they charge?
Yeah, there's tons of options out there. Square became popular because they made it really easy to get signed up. They basically bypassed a whole bunch of underwriting concerns. And so it was pulling the Oprah, you get a card reader, you get a card reader, everyone gets a card reader. And they were just handing those things out like candy. That's how they grew so fast. They've also got good integration on, the fact that if I go buy something at store A and they have Square, and I go buy something at store B, they have Square. Square likes it because they've got all that data, and I don't have to give my receipt, my email every time. So for the end users, there's certain functions and features that are good. I don't like Square. They hold your money. Go Google Square complaints, held money. It's pretty bad. Them and PayPal are just terrible. The rates are higher. When it comes to the actual mechanics of which point of sale to use, I've got a very close friend named Chris Clear. He's actually done at least one presentation here. Not here in the Small Business Challenge, but with some other stuff that Sandy hosts, the New Knowledge. He's done some presentations there, and he's extremely knowledgeable on different point of sales. There's some others, Clover. The problem is there's so many different point of sale systems that if I were to start listing them, we'd be here for the next 4 hours. So at that point, it's really a question of what features are you looking for? How much do you want to pay for that? Do you want to spend a bunch of money on buying iPads and cash registers? Do you want to find something that integrates that over to a low monthly fee? Do you want to find something that starts out low and then you pay for additional features as you use them? Because there's plenty of those out there. You just have to carefully. I can't give you specific recommendations because I don't necessarily know what your business is. I don't know what you're looking for. I don't know how much money you want to spend. And so that's why it ends up being a very business specific question, which is mostly what IT is. It's hard to give just a blanket answer and say, oh yeah, you need a server, because maybe you do. You need a cash register, maybe you do. What kind of cash register, how much do you want to spend on it? Like, that all just matters based on the business. And so I would typically get people connected with Chris. He's extremely knowledgeable and his processing rates are much better than Square's. And he doesn't hold money. He's never once held my money. He's done all my processing.
And Janice,
and it's like anything else, you just can't sign up, buy those point of sale systems and just expect them to work from day one. They take substantial setup on the backside to coordinate with whatever your backside accounting program is. As Jonathan said, you can, once you get into one, you can spend, the different levels of subscriptions to get the data, to get the bells and whistles that you might need to coordinate your accounting information. And a lot of times the delays in processing cash and credit cards and the information that they send through can be complex. And you really got to do your work and understand what you're looking for and make sure you set it up right.
And Janice, Chris Clear did a new knowledge for us just October the 27th, and it's up on our YouTube channel for new knowledge, and it's also on the incubator's Facebook page too.
Hey guys, Scott here. I don't know if can everybody hear me? Just to play devil's advocate just a little bit, like I've been in business with a retail store for 18 months and I've had a lot of success with Square. One of the things I like about Square is they do small business financing, which is really great for a guy like me because I only have 2 part-time employees and it's just me. So some of those financing options have been like super big for me to like grow my business like by leaps and bounds. I get what you're saying about it can be a little bit squirrely on the inventory side. I don't use that function a whole lot. I use it some on some of my like top selling items. But I will say, like, Square's been my friend since 18 months ago, and it's kind of a marriage at this point. And I like it, but I do see why you got some of the negative comments, or not negative, but just like honest comments about it. I can see it. I can see it becoming an issue if the business grows. Like if I try to grow with like 3 or 4 more stores and inventory and like 7 or 8, 10, 20 employees. I can see it becoming a little bit cumbersome, but I really do love the financial opportunity that they give me. They give me small loans to help me kind of get over the humps that I've been faced with COVID. And my business is seasonal, so like right now it's dead up here on the mountain and it's dead at the other store, and which is why I'm looking at growing and trying to do a music venue. So I think overall Square's been good for me, but it might not be a good fit for everybody, especially depending on the growth that you're trying to achieve. Just wanted to play both sides of it, just open conversation.
Absolutely.
And we take credit cards at the incubator, but we don't really have a lot of charges. We probably have, I don't know, $1,500 a month, or let's say $2,000. Well, there's a whole lot of taxes and fees and whatever when you're working with the bank. Ours is through our bank, but we're paying probably, it says 3%, but by the time you add all the taxes and fees and this, that, and the other, it winds up being at least 6% because we have low volume of credit card use. So that's another, another consideration, or another variable is whether to go with your bank. If you've got high volume, your bank's going to probably be able to give you a good deal. We have 2 hands raised. We have Clint Waddell will be first, and then Michael Price will be second.
I just want to say that a lot of times if you actually go to your bank, you can negotiate those rates. We've even got a check scanner here on site that we don't pay for, but normally it's going to be one of those where they do try to pay. So just because somebody gives you a price, don't let that stop you from negotiating.
That's true. And who's next? Michael Price.
I had a question about insurance. What insurance is recommended for someone that has an online presence? Anybody has an e-commerce site or anything that they're dealing with online, because there's a lot of traffic now with the pandemic. What's some of the basic really should cover yourself with on insurances?
Well, you can purchase cybersecurity, or you purchase it as an endorsement on your general liability policy usually, and that covers a lot of a lot of different things, stolen identity and all that sort of stuff.
And I will say that we did a cybersecurity new knowledge. It's great that we have that ESP thing, but we did a cybersecurity workshop on December the 8th with Andrew Darlington at Vertus Risk Management. And there's probably some tips on that. And that's also on the YouTube channel for New Knowledge and the Incubator's Facebook page.
Yeah, cyber insurance is really hot area right now with all that's been going on, especially during the pandemic. You not only need to evaluate the need for cyber insurance, especially if you have personal information of your customers, credit card numbers, dates of birth, social security numbers, anything like that. But you also need to look at the a breach response type of policy that will come in and take care of basically notifying all your customers, monitoring, what's going on with their credit accounts, probably purchasing some credit monitoring insurance form and stuff like that. It's a big issue for small business right now.
Yeah, and I think another aspect of that to consider is, even if you're well protected, you've got all the state of the art data breach protection and that sort of thing. Ransomware happens a lot, systems crash. So business interruption insurance is also a good consideration depending upon, the volume. It can be pricey, but it can also save a business if you suffer a 3-day crash and you're entirely an internet operation. That kind of thing can be very helpful.
Yeah, I can tell you that the cyber criminals, during the pandemic, I guess, they have nothing else to do. So they've increased their activity, and our policy premiums in the last 3 years have gone up 3 times, tripled. Of course, we have thousands of social security numbers, and have a huge online presence. So.
Yeah, and we're sort of going through the same thing, but a lot of what we're dealing with is driven by the client requirements. And no two clients that we have the exact same requirements. So they may require a certain threshold of insurance coverage. They may require a certain, firewall protection system. They may require different audits. So that is an ever changing world, and we get new requests or new demands every month from clients.
So we've had a question. We started talking about cybersecurity and point of sale, but just to go backwards a bit, we have a question about when and how is it appropriate to seek a trademark? I'm assuming that would be a John Martin question.
Sure. I will confess not to know a great deal about the operations. Usually trademarks and patents are specialty attorneys, but the thing with a trademark, you have to remember that you have to have a unique product or a unique item that is new, or at least that you can show is not it's not repetitive from somebody else. You have to be able to show to some extent that whatever you're trying to trademark, typically logos and names, those are, you have, in order to qualify to get the trademark, you have to demonstrate that it's pretty unique to you, to your ownership. Once you do that, though, you go through the process and you get the trademark. You have to submit the trademark for approval and review. The trademark is vetted by the government to determine whether or not it is unique. But the idea as to when you want to start to look into all of that, and I went through all of that to demonstrate that it can be fairly expensive to justify trying to trademark something. So, but if you think you have something that is an asset in your business, that it is unique to you, that it is a brand that helps you get business above somebody else or above a competitor, and you realize that has real economic value, that's the time when you want to start to consider going through the process of expending all those monies to get that trademark. So it's not an easy process, and it can be complicated, and they may require you to change or modify what you think is the coolest logo on the world, business scene. The trademark office may take a look at it and say, no, sorry, it belongs to someone in Spokane, Washington. So if you want to use it here in Southwest Virginia and Upper East Tennessee, you may have to modify it. And then you're going to have to show that your modification doesn't infringe upon the owner of that original in Spokane, Washington. So just weigh those two out. If it really starts to make good money for you and you really think that it is, ideally a trademark is something you can sell down the line. It's kind of it embodies the goodwill of the company. You think of Coca-Cola and that logo that they have, that's universal, it's international. And so that's something that's for marketing purposes and just for quality, et cetera, et cetera. But once you realize that those are the kinds of things that your logo or your title or whatever that is starts to carry, then you might want to talk to a professional about a trademark.
If you don't mind, let me interject for a second. I sought a utility patent for my father on a fishing lure that he made. And utility patent means that you can't copy the design or the use of the patent. And we were all tickled that we'd gotten this utility patent, and we were ready to roll. And Bass Pros copied the name because I didn't trademark the name. And so they are selling a double wired spinnerbait that is not designed like our patented lure is designed. It functions the same, but it was too much of a hair to split to even try. So we spent thousands of dollars on a patent that I did not trademark the name, and Bass Pros stole the name, and you can look it up on their website right now. It's not my father's fishing lure, but there is a fishing lure that's got my father's patented name because I did not trademark it. Having said that, it was very expensive, and if I had it to do over again, I would have just let him sell those fishing lures online without worrying about that patent. That trademark, I think sometimes you get caught up in inertia. You fall in love with something that you can sell. And, I can tell you, Mike Spiegler's still writing it off of my taxes.
Well, and that brings up a good point. The trademarks and patents and things like that, it's a very competitive world, and you have people who make their living off of just like domain names were being, scooped up years ago. There are people out there who know how to make money capitalizing on somebody else's creativity. So, if you do commit to doing it, be ready to go immediately. In other words, don't let it out a little bit at a time. Commit, get your process together, and then go for it.
Questions? Jamie.
So my question is for each of you. My business is going to be private investigations. and I eventually want to focus on digital forensics, computer forensics, cell phone forensics, so on. The question is, as to firms like PennStuart or to a accounting firm or to an insurance company, what is the best way to get my name out there to those people, because that each one of those have a pool of potential clients that I could work with. What's the best way to get my name to those, to a law firm, to an accounting agency or anything like that?
Show up at the door, make personal contact, develop marketing materials, build a brand. But, person to person referrals, come from meeting people, introducing yourselves, getting in front of them, educating them about what you do, how you do it, how you're going to be able to help them and their clients, and just network.
Yeah, I would agree with Mike. I think that's that's a very, very powerful mechanism, and you kind of have to wait it out and be prepared to deal with someone on a bad day when they don't have time to talk to you or their spouse even, and just be willing to kind of keep that in there. But I always think that the best marketing is to go in and to listen. You can come in and tell me what you do 1,000 times over, but if it isn't what I need, then you and I have met each other and sat down and talked and chatted, but we really haven't made a business connection. So, be prepared to give your short bio and your short scenario on what you do, and then, listen. I have a lot of clients who need surveillance, who need forensic investigation, that sort of thing. But I have a lot of clients who never use that. And so, kind of understanding, and it's the same for me when I'm trying to talk to a client, the more I understand about their industry and the more I understand about how I can help them limit their worries at night about their own industry, then the more likely they are to share some of their money with me to do what I do. And so I think that's a really big thing. And I think, I do think emails and email contact are fine, but I think when you do that, you need to have an understanding. I don't think the blind emails are as powerful as somebody who, looks up what my law firm advertises that we do and that sort of thing. And I say that not to say this is how my law firm wants it, but I'm just sharing my thoughts about the way I try to approach clients and what they, what you need to be prepared to sell to those folks.
You should also be able to identify what the pain points are that someone is experiencing, and then help them understand how you're going to relieve it. And then once you have someone that's happy, specifically ask them for referrals.
Yeah. I always tell young attorneys that come to work for me, if you're not alleviating some of the stress for the people you work for every day, then you're really not doing a good job. There are a million attorneys out there. They can hire anybody they want. We're sharing their concerns and trying to help them, get through their own worries. I agree, Jonathan.
Micky, you have any comments about that?
Jamie, if you can find the car warranty folks that spoof your number and so forth, you can make billions of dollars if you could make them go away. I mean, seriously.
So, there's Micky.
Hey, Kathy.
Yes.
Yeah, I was thinking while John and Mike were talking, and the people I've worked with in that business, in other words, written coverage for them, they seem to get a lot of business from law enforcement, local law enforcement mainly. And I'm thinking back a while, but that might be something worth checking out for this gentleman.
Okay. Okay. Thank you all for that. And Christy has her hand up, so we'll go to Christy.
Good evening. My better half has a question regarding when to attain a lawyer and some questions there. So I'm going to let him take the floor.
So just looking at starting the new business, you're just getting off the ground. How does this work? And when you go, sit down, do you just go and talk to the lawyer and maybe try to retain a lawyer first off that gives you some advice? Do you pay them for just that advice? Do you retain them monthly? Same for a CPA. I mean, I don't have a CPA that we use. For a business, would you have them on retainer and pay them a fee, or just pay them per service?
John, I'll let you go first.
Well, I laugh because I think I've been involved in a couple of businesses and had an ex-spouse who had a business, and it seemed like all of our problems were tax related. So that's just even with the best effort and a little bit of knowledge. I think as far as an attorney goes, if you think you're going to run into questions about litigation and questions about avoiding litigation, then you might want to consider having an attorney close, accessible on a more than an appointment basis. But I really don't think for a small business startup, it's good to have a relationship with professionals who can support you in any capacity. Insurance, especially insurance, because I think your greater risk in the beginning, are having problems that you can't foresee. And so insurance can always help you in that capacity. An accountant is somebody you kind of talk to and learn how they want to deal with you. And then you reach out to them on a regular basis. An attorney, if they're, they should be able to get you started and get you rolling, and then give you some understanding about what what it is you need to look out for. And kind of what I always tell folks, these are the red flags. If you run into them, give me a call. If not, you're probably okay. It's not like you're going to get hit with a lawsuit if you have an understanding of what you're supposed to be doing and how you're supposed to go about it. But if you do then get hit with a lawsuit or an administrative action or something like that, then that's the time to come back and deal with your attorney on a case by case basis. But if you're in a high risk area, we deal with coal companies, and there's litigation in every corner for those folks. So those are the kinds of operators that probably want someone on retainer, and they probably have in-house counsel. So, I think you gauge your risk. I do think you talk to somebody in the beginning and get an understanding. If you feel comfortable with what's been relayed to you, I think, then you don't necessarily have to have somebody on retainer. You kind of follow their instructions and then move in that direction.
And that would be not even just a liability attorney, but just even a business attorney that can advise you of, here's some steps that you don't want to miss or something, starting out.
That's right. I think there are a number of really good attorneys in the area who, are not trying to get every penny they can by startup, by dealing with the startup. They know that, good relationships are good paying folks over time. So they give you, like I said, they give you instructions and help you get going, and then you come back to them when you have a real problem.
Yeah. And part of that will also factor in what your priorities are. So like one of my high priorities was not to have an issue with taxes or payroll that was related to me. So I've pretty much always paid someone to handle my payroll and my taxes. And the only times that there's ever been an issue, they took care of it themselves. And, I wasn't on the hook for it. Another priority for me was I had one of my clients review my articles of incorporation and some business agreements that we had, not just for this business, but for other businesses I've started. And so that was well worth the money that we spent, because when things are bad, you don't want to have to negotiate that business agreement because you've already got it in place. So that was something, we spent some money up front for an attorney, and thankfully didn't have to use it. But if we had to use it, and if something went south and you didn't have that sort of agreement in place, that's when you just get really, really, really nasty lawsuits and things get really ugly. And it was just a matter of spending some money and some time to make sure that some of those potential conflicts were avoided. So it's really a question of what your priorities are, especially starting out when you're probably trying to minimize your cash layouts. So
yeah, I'd say that history has showed in our practice for over 30 years that, the most successful clients are those clients who are not afraid to retain professionals, to seek guidance, to seek qualified guidance. And I'm not just saying that to, generate self-income, but it's true. And, in our business, and I think it holds true for most CPA firms, we're interested in helping out new business entrepreneurs and trying to at least have a conversation, get you in front of us, figure out if we're a good fit, generally, an hour conversation, no fee, find out what you're looking for, give you some tips, some things to think about, some things that you may need to address. And then you sort of figure it out from there. What's the menu of services that the firm offers? What's the cost that comes along with them? How much work do you want to do? How much work do you want to pay somebody to do? As Jonathan said, compliance work can be fraught with opportunities for penalties and problems. What kind of quality of life do you want? Do you want to spend hours doing your own bookkeeping, payroll, sales tax that you should be spending with your family? Or do you want, what's the value of your free time versus what you're going to pay somebody to do it? So, most firms will come up with a menu of services based on what your needs are to try to fulfill for you and keep you, between the white and yellow line, so to speak. And firms are different. CPA firms a lot basically are happy to say, here, I did your tax return, see you next year. There's some that are more hands-on, more proactive, check on you, active tax planners. So, you got to vet your relationships and find one that works for you.
Thank you.
I was going to say, I would say when you deal with any of your professionals, one of your objectives is to learn enough from them to kind of take that next step. You're not going to, ideally you'll get enough to kind of give you some confidence in what you're doing. But the idea then is that you don't have to come back all the time, but you also want to listen to them and follow their instructions. And then the last thing I would say is when you do meet with a professional and you decide to sit down and talk to them, go in with a list of questions and listen to what they're saying and ask all your questions, and then ask your new questions from the meeting. And we're here to tell you what we know, and that's a good part of the service that we can provide in the small business arena.
Micky, wouldn't you say that you kind of do that with the insurance also? You start out with some blanket policy, and then as you see, what your liabilities are, or if your liabilities start to grow, shouldn't you review an insurance policy on an annual basis also?
Yes, and some of the policies help you do that. I mean, they're going to, like in the workers' comp deal, they're going to audit you probably every year. General liability is subject to audit. So some of it comes built in. But, like I said earlier, you don't want, if you're like me, you don't like surprises. So you don't want to get to the end of the next year and owe a big balance, a big audit balance.
Okay, panelists, and this is the last call for questions. Anybody? So let me just say this. I can help answer some questions. Sometimes I'll pick up the phone and call these guys that are on here tonight. So again, you've got my email address in the mentors list. And I think all of these guys are on the mentors list. So, don't hesitate. Writing this business plan is the most important thing you're going to do if you're starting your business. And if you're investing substantial resources to expand your business, again, it's very important to get this right as you're doing it. So please don't hesitate to send me an email, send these other guys an email, call, ask questions. Now's the time. If you have questions, we're happy to answer them. That's my job. That's Sandy's job. That's Nita's job. That's Tanya's job. So, and these guys are all professionals. So please, just stay in touch with us. Let us help you. And if you think of a question 2 minutes after we hang up, send me an email. We'll see to it that we get that question answered.
Hey, Kathy, can I ask the businesses a question?
You may. I'm going to have to get off. I've got to go pick up a granddaughter. I'm babysitting tonight. Not babysitting, but I should say teen sitting. So Jonathan can ask a question, and thank you all for participating. And I will see you all next week. Same bat time, same bat station.
Thanks, Kathy. For the businesses, I'm curious to see, are you guys excited and passionate about what you're doing? Like, is this just another job, or is this something that you're really excited to be doing?
I mean, I'll go. I'm super passionate. Yeah, big time. It's like my wife, my partner, she came to me a while back and she said, I was thinking the other day about people who like their jobs, and I couldn't think of any single person who liked their job other than you. And she was like, I know that you love what you do. And it's true. I do. I mean, I genuinely do like what I do. It's painful because I'm a business owner, and obviously there's months and weeks and days where you're like, damn, this shit is hard. Let's just be real frank here. But yeah, I like what I do. Somebody else go.
I feel like I'm just as passionate and excited now as I was, a little over 8 years when we first got started. I feel like that we're growing every year, taking calculated risk, trying to keep bringing more to the community. And it's almost like it's contagious. You get people who want to work with you and do the same type things, and it just helps keep driving you forward.
Hey, I like that word you use, Clint. I mean, I know it can come across as like cheesy sometimes, but like community is like, that's key, right? Like, people want to be seen and heard and understood. And so like, if you can create an environment in your businesses where people are seen and heard and understood, that goes a long way. I mean, it's big. So Clint, I appreciate that. I mean, I think that's a big part of what we do, and what we want to do with our music venue is we want it to be a place where people can come and hang out and get to know each other and like create a community with each other. Because at the end of the day, I mean, we have each other, right? I mean, we depend on each other as humans. And I think that's a big part of what I'm trying to do is create a community-based retail environment, whether it's music or whether it's retail or whether it's just hanging out. But yeah, I like that a lot. That bringing in the community is key.
Well, a lot of people don't like the idea of competition. And, when you're even looking at everybody on this screen, we're all competing for these grants. But I mean, I hope it doesn't make or break anybody, just whether they do or do not get these grants. I mean, I'll be just as happy for you all as if you all get it or if I get it. It's all an investment. I mean, and Mike Price and I, we've talked about this before. if we all have the mindset that if we all grow and bring the community up with us and the other businesses up with us, I mean, it benefits all of us. And it sounds cliche, but I mean, it's true. You know, you create more jobs, it creates more opportunity for our kids to stay in the area instead of moving off, or us having to move off.
Clint, that's great. I mean, I like to use the word or the phrase worthy rival other than competition. At the end of the day, like especially like you guys that are in Mendota, like you guys are my worthy rivals. Like you're trying to do stuff that I'm doing here on the Creeper Trail up on the mountain, you know, and bringing that energy and that vibe and that community-based retail environment down to Abingdon. You know, I mean, anybody who's doing stuff like that alongside me, I consider that a worthy rival. Like we're just going to sharpen our axes together. We're just going to be better together. And you know, iron sharpens iron. So like, if you guys are doing good things and I'm doing good things, we're going to bounce stuff off of each other. Like Clint, I love that, dude. I think that's good. Like I love the energy you're bringing to it.
Super. I love this program. I guess that's why we've done it for 9 years. Hey, before I forget, I wanted to let you all know tomorrow's New Knowledge is on financial projections, and we're going to have the CFO with Food City KVAT stores at noon tomorrow on that. And if you don't have the information to register, I encourage you, if you can, attend. If not, it will be uploaded to our YouTube New Knowledge channel and to the Incubator's Facebook page. But we're pretty excited to have Eddie Neely with Food City KVAT stores to lead that session. And that's part of this. You know, you're going to be working on your business plan and knowing how to calculate those projections, how much money you need and for how long is pretty darn important. So I just wanted to, I know Kathy wanted to mention it, but she had to get off before she could share that. Did everybody get their questions answered tonight? Did you get your money's worth is what is the biggest thing. That's a good thing. Next week, just want to remind you, is all on credit and managing a business. We'll have Cindy Snyder, who works with my organization, the Virginia Community Capital, talk about credit. And we're pretty fortunate to have the lead SBA director for the state of Virginia. Carl Dalbeck is going to be talking about managing a business. Carl, before he started with the SBA, launched and sold a number of businesses and has a lot of experience and talking about trademark and patenting and so forth. He's been through those things. So come next week and also have questions. But please, we said it last week. We'll say it every week until the last week. Don't forget, don't wait till the last minute to start working on those business plans. That's it. Very important on your score. And Anita, I know, shared the list of other business pitches that we did over the years that use that too to help prepare for that part of your grading of this program. So don't wait, get prepared, and I guess I will see you next week, unless anybody's got any questions. Mike, John, Jonathan, and it looks like Micky's already gone. Thanks. Thank you for your time and sharing your expertise. This means a lot to the team and for this program. We couldn't do it without you. So thank you, guys. You all had a fantastic opportunity to learn some very good recommendations for you. So use this, but don't abuse us. We want to do this another year. So take care, be safe, and if there's nothing else, that's all, folks.
Happy to help. Thank you.
Thank you. Bye-bye.